Okay, everybody, welcome. We're going to be talking about the SkyBridge Bitcoin Fund LP. I've got my partner and President and Chief Operating Officer, Brett Messing, that's going to join us in a minute. But I wanted to make a few introductory remarks before we get going. SkyBridge, back in November, we made a several $100 million investment in Bitcoin. That investment has now grown to about $350 million in terms of its market capitalization. The firm worked on Bitcoin and digital currencies in general and decided after a lot of contemplation and analysis that we were going to focus our attention on Bitcoin specifically. We see Bitcoin more as a store of value than we do a digital currency. Brett will go into that in a second. But we're putting our money where our mouth is. So we have $350 million across our product line. On the 22nd of December, we put $25 million of the firm's capital into Bitcoin. I went on CNBC to address that with Scott Wapner on the Fast Money show. The returns have been quite good. We recognize that Bitcoin will be volatile. We've had an asymmetric liftoff, which is a little bit of luck and timing on our part. But by no means is that suggesting that we think that this asset class will go up in a straight line. But in a few moments, Brett is going to explain to everybody why the fundamentals are so strong and why we believe that this is now accepted in the global community as a ledger, a digital ledger. And if you think about it as digital gold, as we point out in our presentation, Bitcoin is actually better at gold than gold is in terms of the portability, the impregnability of the code, meaning it can't be broken into or stolen. And the idea behind Bitcoin creating this super network around money, very similar to what Amazon has done in terms of a super network around retail. Facebook has done the sort of same thing as it relates to social network. And so for all of these reasons, we're very excited about it. And then we made the contemplation of what we were going to do in terms of offering it up to our clients. For those of you that know SkyBridge in the realm of hedge funds, about 10 years ago, we bought a product from Citibank with the direction and the vision of democratizing the hedge fund space for high net worth individuals, whereby in a fund like ours, we have a $25,000 or $50,000 minimum, depending on the financial advisor platforms that we service. And we aggregated probably 25,000 or so accounts and got the firm up to about $7.5 billion of capital. Well, for Bitcoin, we're doing the same thing. Brett will explain that structure, but it's a $50,000 minimum, a 3-month lockup. We're charging 75 basis points on the fund. And we think that sets up nicely in comparison to Grayscale and some of the other digital asset managers out there. It is a buy and hold strategy in that fund. We'll talk a few minutes why we think these fundamentals are so spectacular long term. But again, it's a 3-month lockup, and we sort of are trying to coach people to that 3-month lockup, i.e., I'm thinking about it in terms of a 3 to 5 year holding period. Everybody is a long-term investor until they have short-term losses, of course. But I really do think you have to think of this. If you're going to be in this asset class with us, make a decision to invest with us, you have to think of it over that longer periods of time as opposed to trading an asset like Bitcoin. My last point before I turn it over to Brett is that Michael Saylor is coming on next week. He'll be on, John, when is he coming on the 14th?
Yeah, a week from today, noon Eastern time, Michael Saylor is going to be back on Salt Talks. Okay,
and we want to talk about Michael. Since we last met with Michael, he has several $1 billion now in Bitcoin. And we want to talk about his evolution of getting there, why he's such a fundamental believer in the long-term story. And frankly, him and others, many others, have had a great influence on us. So with that, I'm going to turn it over to Brett Messing. We're going to leave plenty of time for questions from people. We want audience participation, and we want to make this a thorough examination of Bitcoin itself and our fund, and why we think our fund represents such great value right now in the marketplace in comparison to others. So with that, I offer up Brett Messing, the President and Chief Operating Officer at SkyBridge.
Thank you. And law school classmate of Anthony Scaramucci. And I'm wearing a Bitcoin hat because Bitcoin's been.
So Brett, I've been lying about my age to most of the people that are participating on this call. So I was trying to leave out the 34-year relationship
I didn't say
that you and I
34 years.
have. You know what I mean? You could have said that we were kindergarten mates, and that would have been better for me in terms of the story that I'm going with. But go ahead.
All right. So, Bitcoin is on some level super complicated, but it's also very easy. There's a limited supply and there's considerable demand. And let me just put some numbers on it. There will only ever be 21 million Bitcoin, and about 2 or 3 million are gone forever, right? From the early days when it was worthless and people lost them. Just to put that in context, there are 46 million millionaires in the world. So, I hate to break it to everyone on the phone, but you're not getting to Bitcoin unless you move quickly. But there are 4 reasons why, we're really excited about Bitcoin. This is a emerging asset class that's maturing and it's de-risking before our eyes. The first slide you can see, this is the Form 140 that all of us will be, here we go. Form 140 that every one of us will be filing with our taxes. And you can see after you put in your name and all other nonsense address, it asks you about have you traded or owned virtual currencies. So the government is basically saying, we're cool with Bitcoin, we just want to tax it. And importantly, the government has given very favorable tax treatment to Bitcoin. So it's treated like a capital asset. So if you hold it for a year, you get long-term capital gains. I'll contrast that with currencies where you pay ordinary tax and income tax, and even gold where you pay a collectibles tax that's higher than capital gains. But the regulatory environment has really shifted for Bitcoin. And as I said, it's been de-risked. So, banks can now hold, we can go to the next slide, Joe. Banks can now hold Bitcoin. Wyoming approved state charters for Bitcoin banks. The US Treasury just promulgated a rule that essentially tells banks to treat Bitcoin like US dollars. So, if you're wiring over $10,000, they have record-keeping requirements. Those same record-keeping requirements now apply to Bitcoin. There's also been developments on the infrastructure side. Fidelity, the New York Stock Exchange, Northern Trust are in the institutional custody business. And PayPal rolled out Bitcoin trading services to its 238 million users. The second point that's, I think, interesting is that Bitcoin it's an adoption story with sort of a network effect. So if you think about the amount of wealth that's been created through, Apple, Google, Facebook, Amazon, it's really derived by the network effect and the number of users that they have. And so, just as a metaphor, when the telephone was connected, it was Alexander Graham Bell and 3 other guys, and it was not a big deal. You get 20 million people using the phone. Now you have AT&T. Bitcoin is a digital monetary network. And as more and more people own Bitcoin, the value of Bitcoin will go up. It's really that simple. The third point is, the Fed has essentially killed the 60-40 portfolio, right? Jerome Powell has said he's going to keep interest rates at 0 for the next 3 to 5 years. And that creates major problems for retirees, endowments, pension funds, insurance companies, anyone who has, liabilities that they have to meet, financial obligations. And so where's that money going? Well, clearly the stock market, real estate, gold, art. We think it's going to go into Bitcoin. And Bitcoin is so small that if it gets even a small percentage of that money, we could see much higher prices. And then as Anthony mentioned, Bitcoin is digital gold. And it's better at being gold than gold. I'm going to touch on this later because this has been a real important narrative this year. In thinking about Bitcoin, you got to remember that money is technology, right? So money was created to solve for the limitations of barter. We go to the next slide, please. So you had, shells and beads and stones, and we kept improving upon money. And then you get to precious metals, eventually gold. We get coins, we get money backed by gold, we get money not backed by gold, and then we get to Bitcoin, right? It's an evolutionary step forward in the development of money. It's sort of money for the internet. And everyone has their own light bulb moment for Bitcoin. One of mine was, Anthony and I are both Goldman Sachs alumni. When I realized that Square's market cap is bigger than Goldman Sachs's. And in fact, PayPal's is bigger than Bank of America and Goldman Sachs. And I think that just shows, the speed of change to the monetary system, to the banking system. And, we're at a point where, adoption is happening, super quickly. Joe, next slide, please. Bitcoin, was in 2008, it was just a white paper. The growth has been, faster than the internet, faster than cell phones, faster than virtual banking. And we think we are in the perfect place in terms of sort of the S-curve growth of Bitcoin, in that, it's been de-risked. Years ago, this was a very risky asset, right? Silk Road was being used for criminal activity. The early exchanges like Mt. Gox collapsed. Now we have Fidelity. We have the comptroller of the United States out there saying no one's going to ban Bitcoin. And, there are projections that Bitcoin will be owned by 90% of Americans. I mean, I can just say anecdotally, of my friends, almost none of them own Bitcoin. They're increasingly interested, but none of them own it. So, we're still at an early adopter phase. And as we all know, there are special rewards that go to people who move quickly. I'm just going to take a moment to touch on sort of what is Bitcoin, right? Now, this could be, right, a whole video on its own, but there's 2 points I want people to take away. Bitcoin is a scarce digital asset, right? I don't actually like the term cryptocurrency, because Bitcoin isn't something you're going to use to buy a cup of coffee, just like you don't use a bar of gold to buy a cup of coffee, and you don't use a stock certificate for Apple Computer. It's an asset. And, when people think about scarce and digital, it seems like an oxymoron, but maybe not. I mean, cars.com, the domain name, sold for $800 million. Business.com is a domain name sold for $300 million. And I can go on and on. So we do accept this idea that some digital assets can be scarce. So for some, it's easy or helpful to think about Bitcoin as 21 million sort of domain names that are the same, and there are only 21 million of them. So that's the first thing I think is worth thinking about. The other is that the Bitcoin network is the strongest computer network in the world. It's not even close. It is decentralized throughout the world. In fact, we at SkyBridge run a full node, so we support the Bitcoin network. And there's no single point of failure because it's decentralized. So while the Russians can hack, the U.S. government, and someone can get into Target and get all your information, Bitcoin has never been hacked. It's never had an outage. Now, Coinbase is having an outage today, and exchanges can have outage, but Bitcoin, the network, has not. If anyone's interested in learning a lot more about sort of the technical aspect of Bitcoin, there's a book called Inventing Bitcoin by Jan Pritzker, who I highly recommend. It's very readable for laymen. It's 90 minutes. It's like pages. It's like a long magazine article. But this has been an extraordinarily big year for Bitcoin. And, what you've seen is Wall Street embrace Bitcoin, in an extraordinary way. Next slide, please. Every major firm virtually has come out with positive reports or positive statements on Bitcoin. And I just want to highlight 3 of them. The BlackRock CIO was on CNBC recently saying that he could see gold being replaced by Bitcoin because it's more functional than passing around a bar of gold. JP Morgan, which now writes a weekly report on Bitcoin, which I think is significant in and of itself, has said the adoption of Bitcoin by institutional investors has just begun. And of course, we agree with that. And Alliance Bernstein issued a report with the title that I really enjoyed, I've Changed My Mind About Bitcoin and Its Role in Asset Allocation, basically saying that it does have a role. What we've also seen is a whole range of investors move into Bitcoin this year. So we've had hedge fund legends like Paul Tudor Jones, Stanley Druckenmiller, Alan Howard, insurance companies led by Mass Mutual, which bought $100 million. We've seen pension funds like Fairfax Retirement, Harvard University and Stanford University, endowments, mutual funds like Guggenheim has filed to buy $500 million in Bitcoin. So, we're not quite there, but we are approaching the moment where Bitcoin is on the menu for asset allocators. And we believe it's going to be a slice in the pie, right? So there'll be cash, equities, fixed income, alts, gold, and Bitcoin. And again, when you go back to how small Bitcoin is and the limited supply, that would mean much, much higher prices for Bitcoin. the thing that I think has driven the Bitcoin adoption this year has really been the gold narrative. And, it's one that, Anthony touched on. And again, back to the idea that money is technology, Bitcoin is a vast improvement over gold. So, just as an example, the gold supply has increased 10x over the last century. As I mentioned, you'll hear this over and over by Bitcoiners. There will only ever be 21 million Bitcoin. No matter how much demand, no matter what the price, there will only be 21 million. Bitcoin is easy to move around. It's like sending an email, right? Moving gold is like moving bricks. Bitcoin is, from a storing standpoint, right? Gold can be seized, right? Gold has to be in a state with a government that can confiscate it. Can't happen with Bitcoin. Bitcoin cannot be counterfeited. Gold can be counterfeited. Bitcoin is divisible into 100 million subunits called Satoshis. Gold is not easily divisible. The smallest unit is a troy unit of measurement. So, Bitcoin isn't just a little bit better than gold. It's like 10 or 20 times better. So, what does that potentially mean for the price of gold, of Bitcoin? So, in the history of money, you tend to see a winner-take-all dynamic. So the market size of gold is 10 trillion. If Bitcoin were to achieve the same market as gold, you're talking about over $500,000 per Bitcoin. Now, in technology, when a challenger overtakes an incumbent, they usually end up with a market that is considerably larger than that of the incumbent because they have much more to offer. And we believe that's the case for Bitcoin. Again, when we talk about these numbers, this is an over time. We don't think this is going to happen overnight. We did next slide, please. The backdrop for Bitcoin from a macroeconomic environment could not be better. And I think a history lesson of Bitcoin is important here. So, Bitcoin was developed in 2008 out of the financial crisis. And it was intended to provide investors with a store of value where they wouldn't have to trust the government not to devalue the currency, and they wouldn't have to trust banks to stay solvent. And so this appealed immediately to people in places like Argentina, Brazil, Turkey, where the currency continuously collapses and families lose all their wealth every decade, it seems. It made less sense to those up in the United States where the dollar reigns supreme. It's the global reserve currency, but everything changed in March. So, since March, there's been so much money printing that 35% of all U.S. dollars in existence have been printed since March. In fact, of all the dollars that are out there, 78% of them have been printed in the last 10 years. It's also the case that the government's running a deficit of, 25% of GDP, which is the highest since World War II. So make no mistake, the U.S. dollar is being devalued. It's happening around the globe. Europe's doing the same thing, as is Japan. So we don't feel it as much, but we will. And there are going to be significant consequences because of this. And Bitcoin represents a monetary life raft, if you will, in the face of all of this printing. And so I want to wrap up sort of where I started, if you will, which is this idea that Bitcoin's not that complicated. There are more buyers and sellers. I want to put some numbers around it. So on a daily basis, there are 900 Bitcoin mined. And again, 900 no matter how much demand, no matter the price. And that will be the case every single day until the spring of 2024, when it will be reduced to 450 per day. So there are 18.5 million Bitcoin outstanding today. In 2025, there'll be 20 million. And then over the subsequent 115 years, there'll be another million Bitcoin printed. So we are almost done, given that we'll have 20 of the 21 million, by 2025. Presently, there are 3 actors, PayPal, Square, and Grayscale, that buy more than 900 million Bitcoin daily. Okay. So, if you think about the fact, next slide, please. If you think about the fact that, in our view, if we're right, hedge funds are coming to Bitcoin. More public companies like Square and MicroStrategy are coming to Bitcoin. The insurance companies, pension funds and endowments, RIAs are coming. I mean, there's only one conclusion that one can reach, if this dynamic stays the same, we believe it'll stay the same. In fact, we think it's likely to accelerate, is that Bitcoin is going to go a lot higher. And so, we are excited about Bitcoin. As I said, we own it personally. We have a big position in the fund. And, we're excited to, bring this product to investors to provide them with, what we think is a very easy, low cost way and comfortable way for traditional investors to invest in Bitcoin. So I'm going to stop there, but I'm going to throw a question to Anthony that I know is on everyone's mind, particularly today as Bitcoin ticked at 40,000, which is, am I too late? Is it up too much? We think about this a lot. We get questions on it. Anthony, you want to provide a response to that?
Well, I can give my opinion, and then Brett, you should kick in your opinion. But I am taking a very different position on Bitcoin than I think maybe perhaps some of the Bitcoiners and some of the people that are new entrants to it. At $400, when I was actually introduced to it by the Winklevoss brothers back at the SALT conference in 2014, I looked at it and said, okay, I get the concept, I get the idea, but I felt that it was still not proven. It hadn't, in Michael Saylor's words, been attacked by 6,500 different competitors. It was still in that early stage. And so I'm actually more comfortable with it at $30,000 or $40,000 because it has scaled to the point now, and the network itself and the 100,000 plus technological nodes defending the network has scaled to a point of escape velocity and acceptability. And so when you step back and look at that, and I think people do know this, but it's worth noting, Amazon.com, coming public 23, 24 years ago, you would look at Amazon.com. Let's say you own the stock for the first 10 years. You say, okay, that's a significant run. I've missed it. Let's say you weren't in Amazon and you looked at its move over the 10 years. You'd say, okay, wow, I've missed this stock. No need for me to be buying it here. And that would have been an incredible mistake because the last 12 years of Amazon, you've had a 64x move in Amazon. And so the point being is we think that we are in the early stages of the formation of this acceptable network for money. I just want to stop everybody here and just think about this for a second. We have an acceptable network for retail sales, Amazon.com, an acceptable network for Google, search and advertising, Google, a social network in Facebook, and now we have Bitcoin at a $40,000 coin, Brett. It is a $1 trillion market cap. So it is scaled sufficiently, but this is about money. Money is a 5,000-6,000-year-old concept in human history. And what you and I both know is that when technology enters the game, it often improves what was there before. So our parents or grandparents were on a cordless phone like this. We've updated that to a smartphone that has more computational technology and power than landed the people on the moon in 1969. And now we have Bitcoin. We have Bitcoin, which has scaled, has digitized the concept of the store of value. And so you need to step back and look at it for the exponential capability that Bitcoin has from here. And again, at SkyBridge, we often tell people, the FA community, how much should clients have in hedge funds? Well, I often say 5 to 8%. In a situation like Bitcoin, we may have more of our own capital in Bitcoin, but we would certainly implore people to have a 1, 3, potentially 5% position in Bitcoin. And we would want them to think about it as the modern era gold, if you will. And if you think about it from that perspective, you could see this exponential growth. And so that's my answer. It is now an acceptable ledger and an acceptable exchange of value between individuals. We're in a period of rampant monetary expansion by the global central banks, a result of which this also provides some hedging there as well. You want to add anything, Brett?
Yeah, I think the only thing I'd add, the thing that I think is unique about Bitcoin is that as it goes up in price, I think you can argue it becomes less risky, right? So just to contrast, Tesla goes up 700% last year. The valuation gets stretched. Even its biggest bulls like Katie Wood, who's also a Bitcoin bull, would say the easy money's been made. Whereas in Bitcoin, as it gets bigger, there are a lot of investors who wouldn't look at it as a $200 billion asset, as a $1 trillion asset. They're going to come into Bitcoin. You're also getting a different type of buyer. You're getting buyers who are buying it to own it and will have it as part of their asset allocation. Whereas I think if you went back to, sort of the crazy rally, or mania that was 2017, everyone buying Bitcoin was looking to sell Bitcoin. I can speak to myself personally. I have Bitcoin I'm going to be holding for 5-10 years, right? So I think you're getting a different type of buyer with a different outlook. I think it's going to result in the volatility being less. And I also think it makes it very unique. And then I think it's less risky as it becomes more established.
So Brett, the proverbial question is if people can get past the understanding that this is a transactional ledger, and then get past the understanding that they can identify because of the scarcity and the encryption and all these benefits that this is representing value storage. The presentation almost sounds too rosy. So what are the risks?
Look, I think, the biggest risk, right, which exists for Facebook and Google right now also is always regulatory. The regulatory environment is, as I mentioned, has gotten way better over the years and continues to trend in the right direction. Look, there's a point where Bitcoin could get so large that I think just in the same way that a U.S. company, if it gets too large, the regulatory orientation can shift. A lot of people will say, well, because Bitcoin is all around the world, no one state can really hurt it. I hear that, and I think no one state can kill it. But if the United States were to take a very negative regulatory orientation towards Bitcoin, it certainly wouldn't be good for the price. So, I think that's a concern. It's always a concern. It's nothing I'm worried about right now, but I think that down the line, right now, I would say in the short term, the things that I worry about are, like, for example, as we speak, as I mentioned, Bitcoin hit 40,000 and Coinbase is down again. So, if you have, the infrastructure around Bitcoin is still nascent, it's still developing. Well, you can't hack the Bitcoin network, it is hypothetically possible for Coinbase to get hacked. And, they have an enormous insurance policy with Lloyd's of London, but that would rattle people's confidence. So, I'm more concerned about those type of events in the ecosystem. And then, of course, there's just the question of adoption, right? We have a thesis that the adoption is going to continue, that Paul Tudor Jones and Druckenmiller are going to lead to many others, right? And these Mass Mutual will lead to others. And we could be wrong, right? And this could end up being much more of a niche asset class than we imagine it being. So I would say that those, for me, are the two primary risks.
How do you value it? Are we valuing it just on a supply demand? Are there fundamentals that people need to think about? And then the secondary question tied to this is actually, if the government gets aggressive, why wouldn't they just say, okay, we'll tax Bitcoin at 85, 90% on every transaction or every
Well, it's funny, if you look, valuing Bitcoin is challenging. The best way to value it has actually been to look at the number of users. So if you tracked the number of people who own Bitcoin against the price, it correlates almost to a 96%. So as long as we continue to see sort of growth and adoption, and the signs on that, I think are really high. I mean, just the experience we've had in launching this fund, as far as we're aware, every major brokerage firm is probably going to have a Bitcoin offering, on their platforms by the end of the year. A Bitcoin ETF was just filed with the SEC. So again, as the adoption increases, the price will follow. I think gold's market cap is something to keep an eye on, but I'll be the first to concede that figuring out where it can go and what the price is challenging, and as such, I don't actually offer where I think it's going.
What about tax policy, Brett?
No, I think that goes back to the regulatory risk. How would the government, get it? And that's the easiest way to get it, right? Would be, to tax it in a way that's really unfavorable. And again, I think right now, it's taxed in the most possibly favorable way. But we're always going to have to keep an eye on that. You know, look, I think if I were to, my prediction on Bitcoin is that Bitcoin and the US dollar will coexist. I mean, there are some people in the Bitcoin community that think Bitcoin becomes supreme and it's going to replace fiat currencies because it's so much better. I think it's more likely that Bitcoin is FedEx and the US dollar is the US post office, and they find a way to coexist. And Bitcoin has a role as a store of value. And I think, you know, we're such a long way from the point where it becomes disruptive to US monetary policy. Look, that would be the highest class problem for all of us. It would mean that everyone's invested in Bitcoin has made an you know, generational wealth.
Are you dressed like this because you've made a lot of money in Bitcoin? Because I know this is sort of like the whole, you know, Silicon Valley billionaire goal.
Yeah, I'm dressed like this because there's a pandemic, you know, so it's comfort, you know, comfort first.
I was just checking. Okay, so why can't I just buy the Bitcoin myself? Why would I need a fund like the SkyBridge Bitcoin Fund?
No, it's a good question. So, you know, the first Bitcoin I bought on Coinbase. And, you know, you go and you access it on your phone. I don't know if you can see. And it feels like DraftKings. And, you know, every time I would log on, you know, I was like relieved to see that my Bitcoin was still there. And so I think for a traditional investor, buying like a little bit amounts of Bitcoin just to play around, you know, the apps like Robinhood, Square, PayPal, Coinbase are great. If you're going to put any kind of real money, you know, from $25,000 or up, you know, there really isn't a solution right now. And, you know, I think a fund is the best way to go. And, you know, as we've heard from some people, our fund docs, you know, can be unpleasant to fill out. But, you know, I view that as a positive on some level, which is, you know, in our deck, we have a quote from Raoul Pal, which is a truism in life, is that if things are harder, there are usually greater rewards. So right now, Bitcoin is still hard to buy. If you talk to, you know, the OG Bitcoiners, they think it's easy relative to what it was 5-6 years ago, and they're not wrong. But yeah, again, for those of us who, you know, don't want to carry around Bitcoin in a USB and don't want it on our phone and are used to sort of traditional, you know, investment vehicles, you know, until banks can have it and brokerages or there's an ETF, really a private fund is the best way to go.
Is it easier to buy the Grayscale Bitcoin Fund?
It is easier, but I don't think people should do it. The Grayscale Bitcoin Fund, which is the ticker GBTC, first of all, you know, it trades on the pink sheets. And there are a lot of brokerage firms like Morgan Stanley that won't let you buy it. But importantly, you know, it trades at about a 30% premium to the NAV. So, you know, what does that mean? You know, for, you know, every dollar of assets, you're paying $1.30. And, you know, what I think is likely, particularly since, as I mentioned, there was a Bitcoin ETF filed with the SEC just a week or two ago, is I think we will see a Bitcoin ETF. And the premium in Grayscale exists just because that's Grayscale's fault. There's just a scarcity of easy ways to buy Bitcoin. So people are willing to pay this premium to do it to own Bitcoin in a way that's somewhat familiar. But I think the very likely outcome is that we get a Bitcoin ETF approved, and that premium will become a discount. And so you could have a scenario where, you know, it goes from a 30% premium to a 20% discount. You know, Bitcoin goes up 50, 60%, you don't make any money. And so I think it's pretty inadvisable to buy Grayscale right now, particularly with the ETF forthcoming. And we've seen a lot of investors do what I think is a really smart trade, which is to sell Grayscale if they own it and buy our fund at NAV. And, you know, just a quick run through of the math, you know, when you buying 1,000 shares of Grayscale is like buying one Bitcoin. So, you know, given the premium is over 30%, if you were to sell Grayscale at the market at a 30% premium, roll it into our fund, and let's say you had 10,000 shares of Grayscale, that's the equivalent of owning 10 Bitcoin. If you roll it into our fund, it's like almost having 13 Bitcoin. And as you can see, you know, the numbers are listed here on this slide. If you do that swap, let's say you have the GPTC, you do nothing, or you roll it into our fund, and let's say, you know, Bitcoin goes up to 100,000, which would be spectacular. You know, you're almost $300,000 richer for doing something that really is just a bunch of paperwork. So, I think that, this swap is really a no-brainer. And again, look, Grayscale's been great for Bitcoin, but right now, there are just better ways for investors to own, to get exposure to Bitcoin.
I'm gonna turn it over at this point to John Darcy, who has a whole series of questions. A great audience participation today, Brett. We probably have 55 or so questions, so
Right.
we may not get to all of those today. And I understand that there were some problems logging in, so you can signal to your friends. We'll do another repeat performance of this very soon in the near future. And you can let your friends know that are trying to log on. There's a YouTube link. Just ask Sam Tukowski for it, and he'll send that out as well. But go ahead, John.
Yeah, and we'll also have an on-demand version of this webcast available in the next several hours that you can rewatch and also send around to your colleagues who might be interested in the launch call. But yeah, like you said, Anthony, we have about 60 questions in the queue. Some of them duplicate each other somewhat, but we do have a lot of questions. So Brett, we'll try to be as brief as possible and get to the heart of all these questions, but a lot of good questions, which is encouraging for us. So the first question is, how does custody of Bitcoin and other assets work within your fund?
So, our partner on custody is Fidelity. And Fidelity stores the Bitcoin in what's called cold storage. So it's not connected to the internet. So it's just not hackable, right? Because you're offline, if you will. And they have an enormous insurance policy, I think underwritten by Lloyd's of London. So one of the things we look to provide people with is a product where the only thing you have to worry about is the price of Bitcoin, right? Your Bitcoin's not going anywhere because Fidelity's got it. And, Ernst & Young is auditing the fund. We're a $7 billion RIA, registered by the SEC. So, I think we've taken out all of the other risks other than the price of Bitcoin.
Next question is in regards to alternative coins. So SkyBridge is only involved in Bitcoin. Why not involve yourselves in Ethereum and other coins that are out there in the marketplace?
Well, then I'd have to get a new hat. I mean, I have a Bitcoin hat. Look, if Ethereum, there might be something to Ethereum, and I know there are a lot of smart people who believe that to be the case. But again, if you look at what has happened, particularly with the internet and digital networks, is you really tend to get a winner take all in a way that we just haven't seen in U.S. capitalism. And Bitcoin was at one point 95% of the market cap of all digital currencies. As Anthony mentioned, there were, it was attacked during, the 1617 when like 6,000 plus currencies were created. Its percentage of the overall market cap of all of the digital currencies fell to 30%. It's now back above 75% or so and probably going higher. As I've gotten older and I look back on my investing history, I realized that I made things too complicated. And the way to make the most money is to just buy the leader. Right? Just buy Apple, just buy Facebook, don't get cute and buy Yahoo when, because it's cheaper than Google. And so, we are Bitcoin maximalists at SkyBridge.
The next question is regards to the lockup on the fund. So we have a 3-month lockup, quarterly liquidity on the SkyBridge Bitcoin Fund. What was the thinking behind that, given that Bitcoin now trades about $10 billion average daily volume on a 24/7 fairly liquid market?
Yeah, Bitcoin is extremely liquid. I think we are trying to get people to invest in Bitcoin, not to trade in Bitcoin. And so, it was really done as just a signaling device more than anything else.
We have 2 questions that I'm going to lump into one about selling. So are there any adverse tax impacts to individual LPs when other LPs cash out? And why and how does the fund sell any Bitcoin mechanically ever?
Oh, that's a good question. No, the fund is structured so that the departing investor sort of will bear all of the tax consequences, again, associated with their redemption, right? So that gain will not be socialized, right? The person will take their money and their tax liabilities with them. The only time we'll sell Bitcoin is to meet a redemption. This is really not a complicated investment strategy. When we get when we get redemptions, we take the cash, we buy Bitcoin, we just hold the Bitcoin. When someone redeems, we sell whatever amount of Bitcoin is necessary to meet that redemption, wire the cash out, and that's it. There's no hedging, there's no trading. It's very straightforward. This is really it's an access vehicle, right? We are, trying to make it easy for investors to invest in Bitcoin. We think they should. We're excited, and that's really the genesis of the product.
Do you have any concerns about the FinCEN proposed rules regarding virtual currencies? I know our partner, Fidelity Digital Assets, recently came out with some commentary on this subject.
I spend a lot of time deep in the Bitcoin community, and I have a lot of respect for the people that brought it to this place. And it really, if not for their passion and commitment, it wouldn't be there. My view on this runs counter to theirs, which is, I think Bitcoin has grown up. I think that common sense regulation is good for Bitcoin. I think it makes it easier for large institutions, pension funds, insurance companies to buy Bitcoin. Now, I have to say, when those rules came, there actually was, in private circles, a sense of relief among Bitcoiners that it wasn't as bad as people feared it would be. There was a dip right around Thanksgiving when Brian Armstrong, the CEO of Coinbase, tweeted something about it that generated a lot of concern about what the rules might be. But I think the push against the regulation is more, the worry that, a weed takes over the whole backyard. I really don't think there's that much concern about this specific regulation. I think it's an attempt to draw a line in the sand. But the true Bitcoiners' view is leave us alone and let us innovate. And that really, look, those of us who, I'm not a New Yorker, but I'm in New York now, realize it's a dangerous world out there. And, Treasury has good reasons for wanting to regulate, Bitcoin, just like they're regulating antiquities now. Anything that can be used, illicitly to finance terrorism, needs to be regulated. So I think it's good for Bitcoin.
You touched on these themes, but I just want to hammer it home again based on an audience question. Could you explain why it's safer, in your view, to own Bitcoin through SkyBridge's fund as opposed to through a PayPal account specifically?
Right. Well, when you own PayPal, you're subject to a SIM card swap. You're subject to phishing, and if you read the terms of service for PayPal, it's like buyer beware in terms of if something happens to your Bitcoin. So I think it's considerably safer to buy Bitcoin. Again, if you buy it through SkyBridge, through our fund, it's with Fidelity, it's sitting in cold storage, it's insured. I mean, it's really night and day. My kids own some Bitcoin on PayPal, and I think it's great. It's bringing people into the space. One of the things that I always say about Bitcoin is the first Bitcoin you buy is the hardest, right? Because it is this thing that's counterintuitive, and you can't stop remembering the fact that your cab driver and your Pilates instructor and all these people wanted to get rich with Bitcoin years ago, and Silk Road. But once you buy it, you get more engaged with it. And so PayPal's great. Buy it on PayPal, get more engaged, understand it more, and then you need to buy it somewhere safer. And look, I think we're not that far away in terms of it's a couple of years where you're going to be able to buy it in your Goldman Sachs, Merrill Lynch brokerage account. But between now and there, it is more challenging, and I think there are going to be a lot of rewards for early adopters who are willing to move, and invest in our fund or through other vehicles.
So Van Eck recently filed again for a Bitcoin ETF. When do you think that potentially could come to market, and why would you invest in the SkyBridge Bitcoin Fund structure as opposed to waiting for an ETF?
Oh, you definitely want to get in before the ETF. There's no question about that, because there's going to be a lot of money coming into that ETF. And again, you have to just always remember we have this very limited supply. So as the demand increases, you can get parabolic price movements. Okay, so a big Bitcoin ETF would be fantastic for the space. I think it was very smart of Van Eck to file. As everyone I think is aware, we have a new president, which means we're going to get a new SEC chair. If you assume Biden, he hasn't named who the SEC chair will be yet, so it's going to be a couple months for that appointment to be made, to get through Senate confirmation. I think if you went lightning speed, that ETF could roll out at the end of the year. I think it's more likely a first half of next year event. Again, this is assuming that it gets approved. I haven't really gotten into the details of this particular filing and its structure, but I think it's time. Bitcoin is very unique in that it's the first asset class where individual investors had a chance to get in ahead of, hedge funds and billionaire, all the huge institutional capital. And, that window is closing. It's still open, but it's closing. And so, I think you definitely want to get in it. If there's an ETF, I'm willing to bet a lot of money that it will happen at much, much higher prices than we have today.
You recommended a book earlier in the presentation. We had a few people asking for you to repeat that book that's educational about Bitcoin. And what other reading materials would you recommend for people that are learning the space?
The book is Inventing Bitcoin by Jan Prisker. It is the best book that I've read in terms of just explaining, things like, blockchain and proof of work and how in a very understandable way. My favorite piece on sort of, the bullish case for Bitcoin is on our website. And it's about, it's a 40-page piece that was put up, I think it was published on Medium, and it's excellent. Those would be the two pieces. And if someone wants to read sort of a fun book about the development of Bitcoin and from sort of the first 5 years, if you will, there's a book called Digital Gold by Nathaniel Popper, who is a New York Times reporter who wrote about it. But if I had to pick one, because I think understanding, the mechanics of the technology is less important. It's interesting, but less important is the piece by VJ on our website, which you can also get online. The bullish case for Bitcoin is really phenomenal.
And our website that Brett is mentioning is skybridgebitcoin.com. We have our full deck, a few of the slides of which Brett shared during this presentation. We have all of our contact information and a lot of great research and clips from SALT talks that we've done on Bitcoin, people like Michael Saylor, Raoul Pal, and others, skybridgebitcoin.com. So you mentioned the Biden administration. We don't know who the SEC chair is going to be, but in general, in terms of our macro view on Bitcoin, how do you think a democratically controlled Senate and a Biden administration plays into the Bitcoin story?
Oh, I think it's better. It's not a lot better. But you're likely to get some more stimulus, right? Which I think if the Republicans controlled the Senate, you would not have gotten. And so, Bitcoin benefits from, fiscal spending, monetary spending, and the Democrats are more likely to. And, as many people may be aware that, there's an increasing view among economists led by Larry Sumner that debt doesn't matter, right? That just spend, don't worry about the debt, particularly with low interest rates. We can take care of that at some future date. And, this is just the perfect environment for Bitcoin, just the flood of money coming out of the Fed, combined with, what might be profligate spending by governments around the world. It's sort of a very exciting time, I think, to be in Bitcoin.
So we talked about this on our SALT talk with the Winklevoss twins, which I would recommend everyone go watch. But there's this stigma around Bitcoin for people who don't understand it, that it's used only for nefarious activities, that it has full anonymity for people that use it. How does it shake that stigma, and what's really the truth around identity and all the other issues that people talk about related to Bitcoin?
No, it's a good point. I think Bitcoin, at least it used to, and probably still has residue of that. Had sort of a branding problem, which was deserved. In the early days, there was a lot of criminal use for Bitcoin. Again, Silk Road being the most notorious, if you will. There was a RAND study last year that of all Bitcoin use, less than 1% is for illicit activity. It continues to be the case that The most common use for the criminals and terrorists like is cash. Right? Good old-fashioned cash is still better than Bitcoin. And Bitcoin is not anonymous. It's pseudonymous. It's hard to track, but it's not impossible to track. And so the FBI has gotten quite good at it, and it actually is not the digital currency that you would want to use for crime. And in fact, there are others, that have been designed with much more enhanced privacy features, really for that use case, right? To avoid law enforcement, and that's just not the case for Bitcoin. I think it's going to take time. Time heals everything, but also again, just the adoption by, and when you see an insurance company like Mass Mutual buying, that's just a signal, and I think there's going to be more and more of that, and you combine institutional adoption with the passage of time from that past, which, that sort of was what it was back then.
Right. So you talked about the primary bull case on Bitcoin is that it's an alternative store of value similar to gold. Do you have a house view on if someone is invested in gold today and they have an allocation in their portfolio that's dedicated to alternative stores of value, how they should break up allocating to gold versus allocating to Bitcoin? Or do you leave that to the individual investor to decide?
Look, I think ultimately it becomes a function of, what your risk tolerance is. I've heard of people, doing, sort of an 80-20 allocation between gold and Bitcoin. And then what happens is as they get more comfortable with Bitcoin, they shift that allocation. So it really becomes, it's very, very focused on what the individual's risk tolerance is. But I want to use that to make another point, which is, people are concerned about the volatility of Bitcoin. And, I view that as just a sizing issue, right? Bitcoin is going to go up a lot. It's going to have pullbacks of 20 or 30%. If it is right size for your risk tolerance, it won't be a problem. If you have too big a position, it will be a problem, and you'll likely sell it at the wrong time. So, I guess that would just be sort of my thoughts on it.
Yeah, you talked a little bit about GBTC and the premium that exists there, and our belief that that premium represents some risk to holders of GBTC. So if someone owns Bitcoin in Coinbase or they own GBTC, what are ways that they can transfer that allocation into the SkyBridge Bitcoin Fund?
Well, if you own Bitcoin, whether it be at Coinbase or elsewhere, you actually can make an in-kind subscription to our fund. So you can transfer the fund, and we can arrange it where you transfer it to Fidelity, and you end up with an interest in our fund. And that's sort of, quite easy to do. I'd say stay tuned on the GBTC. We're trying to work on a mechanism where people can contribute their GBTC and make that easier, because we've just encountered, a lot of folks who have it and realize that, that premium is like it's like a shrinking ice cube. It's going to go away, and candidly, it could go away quickly. if we get an ETF, when we get an ETF, I mean, it could go from a 30% premium to, a 20% discount, in the space of weeks.
So the SkyBridge Fund has weekly subscriptions. When you get a subscription that comes into the fund, how are we purchasing the Bitcoin for the fund? Are we targeting a specific price? Is there a certain trade date and time? Are we using any active trading strategies? How does that process work?
So I have a news flash first, which even SkyBridge employees, other than just a handful of people, our colleagues don't know yet. We are going to move to daily subscriptions. We've just gotten such good response that we're going to make it easier for people to just if they can get their documents and the money in, we'll get them into the fund. And in terms of how is it made is we will buy Bitcoin based on sort of the closing price, if you will, based on we use a Bloomberg reference rate. And so we target, that the new cash is invested at the same, price as the close. It's not quite as easy. You know, if it was a stock that traded on the New York Stock Exchange, you could put in what's called a market on close order. It isn't quite as easy as that, but we have sort of trading algorithms that allow us to closely approximate that outcome.
Could you explain XBT a little bit more? So our fund is priced based off of the Bloomberg Bitcoin composite quote XBT. Could you explain how that's calculated and where people can find that?
Yeah, you can find it on Bloomberg. The XBT is really, it's the average price of Bitcoin between the hours of 4 and 4:15 East Coast time, right? So it's essentially, the price, every couple seconds over that 15 minutes, right, divided by the amount of time. So that's the algorithm that I referenced that we have to trade against the XBT calculation methodology, to try to match it.
So I believe this was touched on a little bit, but I want to hammer home the point again based on a question. So can someone roll over part of their 401k or IRA over to the SkyBridge Bitcoin Fund?
Yes, and in fact, we've had, I think at least half or so, or close to that, maybe not half, of a lot of them, of our initial investors are investing with through their IRAs. We have a partner, Alto, who has great technology on that, and there's a link off of our website to Alto, and they make it quite easy. And I guess just one other thing I want to mention again as someone who invested through Coinbase. As with any of these app services, you can't get someone on the phone, right? So if you have any kind of problem with anything, it's impossible to get someone on the phone. If you invest in the SkyBridge Fund, we're here. We will help work through the documents. And the folks at Alto, who it's a new relationship for us at SkyBridge, have really just been fantastic in terms of the service level. So, we're doing everything that we can to make the experience easier, including this news flash, that we're moving, to daily. We've been up and running for a couple of days. We're making an adjustment to make it more sort of investor friendly, if you will.
So we're going to go on for a few more minutes and try to answer the remaining questions. We have another question that came in about IRA investing. So we have people that have their IRA custodied at Schwab and some that are custodied at Fidelity. Where do we stand on working with those platforms? Unfortunately, not where we'd like to be, and that's why we're in business with Alto. Is that they presently are not willing to act as custodian for really any Bitcoin fund, but really they're not in the business of acting as custodian for any private fund. So they won't do it for most hedge funds, most private equity funds. I mean, that's really what Alto's business is to be a custodian for alternative investments, because the firms you referenced won't provide that service. Another question about supply and demand. So this is actually an interesting question that I think you'll have an interesting answer to, Brett. Is it seems like there's a supply shortage today in the market for Bitcoin. There's a lot of Bitcoin that's moving off of exchanges into cold storage, so that the basically liquid supply of Bitcoin out there is decreasing, while at the same time demand from institutions, whether it be hedge funds, family offices, sovereign wealth funds, potentially insurance companies, is dramatically increasing. What effect do you think that could have on price?
Goes a lot higher. I mean, that's, that is the super bull case for Bitcoin right now, again, from a technical trading standpoint, right? Which is, as I said, there are three actors, Square, PayPal, and Grayscale, that are buying considerably more than the 900 Bitcoin that are being mined on a daily basis. And you have this flood of institutional capital coming in, and you have an increasing group of buyers, like me and, my partners here at SkyBridge, who, we're not looking to buy Bitcoin to sell it, at 60,000. We're looking to buy Bitcoin, put it away, because it might be worth 500,000 to $1 million 8 years down the road. I mean, if you think about how the most money has been made, at least that I've seen in my career, is by buying something and doing nothing. If you buy the right thing, right? Whether it's, more recently, the companies we mentioned, Google, Facebook, Amazon, but, that's true also for, companies like Berkshire Hathaway. How many Berkshire Hathaway centimillionaires there are, where they, they acquired the stock and they just held it. And I think that there's look, there's still a lot of speculation in Bitcoin. I'm not saying that, there are leverage players, particularly in Asia. There's a lot of trading going on, but as it matures, there's an increasing number of holders, institutional, family office, individuals, who, are hoarding the Bitcoin, right? So you have, hoarding of Bitcoin while you have a lot of, demand coming in. And, it's really, one last thing to say is, and I like the analogy to Tesla stock. Tesla went up 700% last year, but Elon Musk did 2 massive secondary offerings, and Tesla issues tons of stock options, right? So the number of outstanding shares of Tesla, even as it went up 700%, increased very substantially last year. That can't happen to Bitcoin. Right? So if you had the same dynamic, and I'm not predicting that you will, but if you have the same dynamic of the same amount of capital that went into Tesla, let's just say in 2020, coming into Bitcoin, you're up a lot more than 700%.
Right. So the last question that we're going to ask, and hopefully we got to just about every question, every topic that was posted in the Q&A. Satoshi Nakamoto is the creator of Bitcoin. We don't know whether that is an individual person or a group of people, but could you talk a little bit about the implications of the anonymity of the creators of Bitcoin, whether that's a positive or negative, and what that means for people that are investing in the space?
I think it is a really big positive. And, the deeper you dive into Bitcoin, you realize, there's, I don't want to get poetic about it. There's a real brilliance to it that reminds me actually of the founding fathers and the Constitution and how it was sort of structured. And I think the fact that there isn't an individual, because the thing we know about individuals is we're all flawed, right? And we've all made mistakes, right? And so if we knew who the founder was, we would know all their flaws.
Not me, Brett. I just
not you.
Point that out. Okay, this is
right.
No mistakes been made here on this part.
So I think the creation myth is really important. And again, I go back to the early days of Bitcoin. We are bullish on Bitcoin. We're passionate on Bitcoin. But, if something happened, we would ruthlessly sell it as well and tell people to sell it, right? The early adopters were religious in their zeal for Bitcoin. And I think it took that type of religious commitment to carry Bitcoin to where it is. Bitcoin should have been destroyed. And I think the fact that we don't know who the creator was helped a lot in that regard. And I'll end on one thing, which is, George Soros has said that if an asset should have been destroyed, but somehow it survives, it should be bought. And I think that argument can be made for Bitcoin.
Well, Brett, thanks so much for a fantastic presentation. Anthony, thank you as well. Do you have any final word, Anthony? I know Brett did a lot of the talking here. He did a great job.
No, listen, great job by Brett. I would encourage people to go to skybridgebitcoin.com. That's skybridgebitcoin.com. We've done a ton of research. There's additional interviews. There's a white paper. There's our PowerPoint presentation. And of course, you can call us. Our contact information is there. Very exciting start for the SkyBridge Bitcoin Fund. And we'll be doing more of these in the future. And I appreciate everybody joining us today.